What is going on, everybody? My name is Christian Robert, and today I am going to take you in depth into my TD Ameritrade portfolio. But as always, make sure if you haven't already, you subscribe to the channel and like the video. So you see on the screen in highlighted, we have reached $69,000 in the portfolio. Now, I reached $69,000 in the past. It was right before that big drop, and it was when Tesla reached the $950 range, but it didn't close on 69,000, so I don't really count it. And a lot of changes have been made. I've been adding some money to the portfolio, so I just wanted to go through the portfolio and show you what has changed pretty much. So, of course, starting off, we have Tesla as the dominant position holder in this. We have $30,895 worth of market value. That's 37 shares at an average cost of $348.16. I am up just under 140%. And I was actually thinking of buying 3 shares on Friday or Thursday when it was at 805. I really want to just hit that 40 share mark, but the price just keeps going up, so it's a tough thing to do. I think eventually I will get those 3 shares, but we will see what happens. Next, we have 3M. I've been adding to this one. I am just under 50 shares, market value at $7,800. Average cost $164. I was really buying this one up when it had an above 4% dividend, so that was really nice. And then Realty Income, I've been buying a lot of this one lately. I'm now at 125 shares at an average cost of $63.57. I owned this one in the past, and back then I had an average cost in the high 40s, low 50s. So I'm really trying to get this one back into an average price into the mid to high 50s at least. But I'm bringing in over a 5% yield on all of these shares. Excuse me. And I should be bringing in about $27 in this next coming month. Next, we have MO Altria Group. I have 150 shares at an average cost of $46.72. I'm down 16%, but this is really just a long-term hold. It offers a really attractive dividend, and it's relatively safe, so I don't care if I'm down or not. I'm not necessarily buying more because I already have a lot of exposure. Not only do I have exposure in buying the stock itself, but it's actually a big percentage in SPHD, which I've been buying a lot of. Also, I have 150 shares, market value $5,021. I'm pretty much even on it now. Average cost at $33. This is a really big holding of mine, and I'd like it to represent even more. I'd like this to represent between 10 to 20% of the overall portfolio in a perfect scenario. So I'm a long ways off that. Next, we have AbbVie. I bought a few shares, 35 shares, average cost at $80. Disney, I bought a few shares on the recent dip. I have 25 shares, don't mind my 2 dogs. $3,030, average cost $120.82. I'm not necessarily buying this one either right now. With things unknown in the future, I'm not sure if they might have to close down some of their parks again. And so I'd really like this one under $100 for me to add more to it in the short term. Next, we have Wynn Resorts, 35 shares. Not much has changed with this one. I'm not adding to it since they suspended the dividend. Although once they bring back the dividend, I'm hoping in the next year, I might have to seriously consider adding depending on the price. Next is a very new holding, and I've really brought it to the top of the list, and that is Qualcomm. I have 30 shares, average cost $75.33. I'm up 7.3%. Now, I was recently thinking to myself about my portfolio and things I'd like to change about it. And one thing that I've kind of I don't want to say I had an epiphany, but I feel like I need more growth into the portfolio along with the dividend. And so I've been really trying to think about, given that I'm still in my 20s and I have a really long time horizon with investing, I can stomach more risk, I can stomach more volatility. And so I was just thinking to myself, I really need more exposure in technology and semiconductors and up new just new stuff. So for me, I stumbled upon Qualcomm and I like their exposure with the semiconductors and 5G. So I've been adding to that. And also AVGO, which is Broadcom. It's basically the same thing as Qualcomm. I have 7 shares, average cost $287. And so I really want to, bring more tech and exposure to growth. Even like Visa I own, I want to increase the size of it. But, I have a lot of these stocks that are great that I love, like the Disney's, Starbucks, IBM, AT&T. They're great holdings, but, if I really want to grow my portfolio, I really need stocks that will have capital appreciation over the years. And the AT&Ts, you're not going to see 10, 20% capital appreciation years that often because there's slow and steady stocks that just provide a really safe and stable dividend, which I love. But like I said, I want to be more diversified so I can really grow this account. But if we backtrack just a bit, I have Starbucks 20 shares. That's a new holding of mine. Really enjoying this one. I'm already up 11%. Main Street Capital, 50 shares, up 30%. I wanted to get this one to 100 shares so I could collect $20 a month in dividends, but it just ran up in price so fast that I didn't really have a chance. Hoping that dividend is stable. RTX, which is Raytheon, this is definitely my defensive play. This is one of the stocks that got split with United Technologies. And so once the split occurred, I bought more shares. Really enjoying this one. I think this is going to be a great defensive play for me. And going down, we have IBM 10 shares, Visa 6 shares. I definitely want more of this, but once again, the price was running up on me. I was getting in at the 170s and high 160s, so I'm kind of being patient on that one. PNC, I touched on this in the previous video. I love this bank stock. I think it's really underappreciated because of the Bank of America's and JP Morgan's. Those are kind of the go-to stock picks for a lot of dividend investors in the bank sector, but I really think people are sleeping on this one, and I think it is at a pretty good value. Skyworks Solution, this is another one where I should have been adding, but I'm up so much on it, I didn't feel comfortable at that time. I added NVIDIA, 2 shares. I'm already up just under 40%, which is awesome. So you can see a trend that I'm adding more stocks that will provide growth. I would still like them to have a dividend. Like NVIDIA, you can see it has a 0.18% dividend. So we're not talking about a 4 or 5% yield here, but I'm already seeing that capital appreciation, which is a great mixture to the portfolio. And then I added some stuff on the big dip recently, like Waste Management. I bought 5 shares and I'm already up 19%. Pepsi, 4 shares, I'm up 21%. So, nothing's changing about the way I invest. I'm still going after those dividend aristocrat type stocks, those safer plays. It's all about a healthy balance based on your risk tolerance. What else did I add? I bought Boeing at $99.65, which I think was an incredible price to get in, even though the dividend is suspended. General Mills, I bought 5 shares and I'm already up 28%. So, it's really about when those dips or those opportunities occur that you take advantage of them. I bought some of KeyBank and CenturyLink just because it's down a lot, so I wanted to add to those holdings as well. Johnson & Johnson, I got 2 shares on the dip as well, up 19%. JP Morgan, 3 shares. I don't think Duke Energy, I got 3 shares at 82.83. I bought some more Delta Airlines to lower my cost basis, and I believe that was it. So nothing, these are all such small holdings, I don't really talk about them. And that is another thing I wanted to address about my portfolio. I'm kind of just scrolling through so you can see. But another thing about my portfolio is that I'm also realizing that, sometimes owning this many stocks isn't necessarily a good thing, because when I do check my stocks day to day or week to week, I really am just looking at those top 10, 15 stocks that I own, because they're the only stocks that have a respectable amount of money into it. So I've realized that I'm comfortable having a lot of money in a specific company. Like, I have, if you count the loss, I have over $8,000 of my own money put into 3M, or, $8,000 into O Realty Income, 7,000 in Altria Group. I'm comfortable owning stocks where I have several $1,000s in. And so to me, I realized that I really need to focus on a core, like a top 5 or 10 stocks that I have a lot of money into. So that'll be the big focus moving forward. The Qualcomm, I'd like to get 100 shares relatively soon into this. And these top 5, 10, 15 stocks, I want to really dial in, figure out my priority list, and eventually get to a point where each of them has 5 figures in each of them. I was kind of hoping to get over 10,000 in 3M, but I'm going to hold out and hope that we can get back into the 4% dividend range before I do that. But yeah, that is it for the portfolio. I might be adding some more money in the next coming weeks, more than the normal weekly amount. So stay tuned for that. And I have one more video I'm going to be filming today on Sunday that I will put out after this one. I hope you guys enjoy it. It's something that I haven't done on the channel before. But as always, make sure if you enjoy this content, you like and subscribe, and I will see you guys in the next one.